Question 1. Topic: Illinois Workers' Compensation Law. Emma, an Illinois-based employee, sustains an injury while performing her regular work duties. After the injury, she is unable to work for 2 months and seeks compensation under her employer's workers' compensation insurance. Emma's injury was not severe, and after receiving medical treatment, she is expected to return to work without permanent impairment. What type of disability benefit is Emma likely entitled to under the Illinois Workers' Compensation Act? A. Permanent total disability (PTD). B. Temporary total disability (TD). C. Permanent partial disability (PPD). D. Temporary partial disability. Answer: B. Temporary total disability (TD). Explanation: under the Illinois Workers' Compensation Act, temporary total disability (TD) benefits are provided when an employee is temporarily unable to work due to a workplace injury, but is expected to fully recover. Since Emma's injury requires a 2-month recovery period and she is expected to return to work, TTD applies. Permanent total disability (PTD) would apply if she were unable to return to work at all, while permanent partial disability (PPD) applies to permanent impairments. Temporary partial disability (TPD) applies if she could return to work with reduced duties. Question 2. Topic: Personal auto policy. John is driving his car in Illinois and is involved in an accident where the other driver is at fault but does not have insurance. John suffers injuries and files a claim under his own personal auto policy (PAP). Which coverage would protect John in this situation? A. Collision coverage. B. Medical payments coverage. C. Uninsured motorist coverage. D. Comprehensive coverage. Answer: C. Uninsured motorist coverage. Explanation: uninsured motorist coverage in Illinois protects drivers if they are injured in an accident where the other party is at fault but does not have insurance. This coverage provides compensation for medical bills and other expenses resulting from the accident. Collision coverage applies to damages to John's vehicle, while comprehensive coverage protects against non-collision events like theft or weather damage. Medical payments coverage can help pay for medical expenses, but does not address the lack of insurance from the other driver. Question 3. Topic: Commercial general liability. CGL policy. Which of the following is not typically covered under commercial general liability CGL policy? A. Bodily injury caused by a product sold by the insured. B. Personal injury due to defamation committed by the insured. C. Pollution damage caused by the insured's operations. D. Property damage occurring on the insured's premises. Answer: C. Pollution damage caused by the insured's operations. Explanation: commercial general liability CGL policies typically exclude pollution damage caused by the insured's operations unless specific pollution liability coverage is added via endorsement. Bodily injury due to product liability, personal injury such as defamation or slander, and property damage on the insured's premises are generally covered under a standard CGL policy. Pollution liability often requires a separate policy or endorsement due to the environmental and regulatory complexities involved. Question 4. Topic: Business Owners Policy. BOP. Which of the following businesses is least likely to qualify for a business owner's policy? BOP. A small retail store. B. A mid-sized accounting firm. C. A large manufacturing plant. D. A small apartment building. Answer: C. A large manufacturing plant. Explanation: a business owner's policy (BOP) is typically designed for small to mid-sized businesses such as retail stores, small professional offices like accounting firms, and small apartment buildings. Large manufacturing plants are generally considered high risk due to their scale and nature of operations, and they require more specialized separate coverage, often through commercial property and liability policies. The BOP combines property and liability insurance in a simplified package for low-risk, smaller businesses. Question 5. Topic: Personal umbrella policy. A personal umbrella policy is designed to provide coverage for which of the following scenarios? A. Damage to the insured's own property from fire. B. Liability claims exceeding the limits of underlying insurance policies. C. Costs associated with medical treatments for the insured's own injuries. D. Flood damage to the insured's home. Answer: B. Liability claims exceeding the limits of underlying insurance policies. Explanation: a personal umbrella policy provides additional liability coverage that kicks in when the liability limits of underlying policies, such as auto or homeowners insurance, are exhausted. It does not cover the insured's own property injuries or specific perils like flood damage, which requires separate flood insurance. The primary function of an umbrella policy is to offer extended protection against large liability claims such as lawsuits or significant personal injury claims. Question 6. Topic: Commercial property policy. If fire damages a business's building and temporarily halts operations, the company files a claim under their commercial property policy. Which additional coverage can help the business recover lost income during the period of restoration? A. Building and personal property coverage. B. Business income coverage. C. Extra expense coverage. D. Ordinance or law coverage. Answer: B. Business income coverage. Explanation: business income coverage, also known as business interruption insurance, helps a business recover lost income due to the suspension of operations caused by covered perils like fire. This coverage typically provides compensation for lost profits and operating expenses during the period of restoration. Extra expense coverage covers costs incurred to continue operations during repairs, and ordinance or law coverage addresses costs for required repairs due to local building laws. Building and personal property coverage deals with physical damage to the building or contents. Question 7. Topic: Illinois insurance regulations. Marketing practices. Which of the following is considered an unfair trade practice under Illinois insurance law? A. Offering a discount on a life insurance policy for healthy individuals. B. Providing a gift card worth $5 as a token of appreciation for purchasing a policy. C. Rebating a portion of the agent's commission to the insured to incentivize purchasing a policy. D. Sending a brochure detailing the insurance policy terms and conditions. Answer: C. Rebating a portion of the agent's commission to the insured to incentivize purchasing a policy. Explanation: rebating or offering part of an agent's commission or other inducements to the insured to secure a sale is considered an unfair trade practice under Illinois insurance law. It violates ethical marketing standards by potentially influencing clients to buy insurance based on financial incentives rather than the merits of the policy. Offering small, nominal gifts, such as a $5 token or promotional materials, is typically allowed as long as it doesn't constitute an improper inducement or rebate. Question 8. Topic: Commercial general liability. Products and completed operations. Which of the following situations would likely be covered under the products and completed operations portion of a commercial general liability CGL policy? A. An employee falls on the insured's premises while performing their job. B. A customer is injured due to a defect in a product sold by the insured. C. A fire damages the insured's building during renovation work. D. A company vehicle causes an accident while making deliveries. Answer: B. A customer is injured due to a defect in a product sold by the insured. Explanation: the products and completed operations coverage in a commercial general liability CGL policy protects the insured against liability for injuries or property damage caused by defects in products they sell or in work they have completed. In this case, the injury to the customer from a defective product falls under this category. Coverage for an employee's fall would be handled by workers' compensation, while vehicle accidents would be addressed by commercial auto policies. Question 9. Topic: Inland marine insurance. Which of the following items would typically be covered under a commercial inland marine policy? A. A warehouse building damaged by a flood. B. Office furniture inside the company's headquarters. C. Tools and equipment being transported to a job site. D. Employee injuries during transit. Answer: C. Tools and equipment being transported to a job site. Explanation: inland marine insurance covers property that is in transit or involved in transportation and communication, such as tools and equipment being moved to a job site. It provides coverage for movable property that might not be covered under a traditional property policy. A warehouse building would be covered under commercial property insurance, while employee injuries would fall under workers' compensation. Office furniture within the building would also be covered by commercial property insurance, not inland marine insurance. Question 10. Topic: Workers' compensation insurance. In Illinois, which of the following types of injuries is not compensable under the Illinois Workers' Compensation Act? A. An injury caused by repetitive motion over time. B. A temporary injury that leads to 2 weeks of missed work. C. An injury sustained while intoxicated on the job. D. An injury from lifting heavy objects during normal work duties. Answer: C. An injury sustained while intoxicated on the job. Explanation: under the Illinois Workers' Compensation Act, injuries sustained while the employee is under the influence of alcohol or drugs are generally not compensable, as the intoxication would likely be deemed the proximate cause of the injury. Injuries caused by repetitive motion, temporary injuries that result in missed work and injuries from performing normal job duties, such as lifting, are typically compensable as long as they occur within the scope of employment and are not the result of intoxication or intentional misconduct. Question 11, topic Illinois Workers' Compensation Act. An Illinois construction worker suffers a permanent partial disability after an on-the-job accident. Which of the following benefits is the worker most likely entitled to under the Illinois Workers' Compensation Act? A. Temporary total disability (TD) benefits. B. Permanent partial disability (PPD) benefits. C. Death benefits. D. Rehabilitation services. Answer: B. Permanent partial disability (PPD) benefits. Explanation: under the Illinois Workers' Compensation Act, permanent partial disability (PPD) benefits are paid to workers who suffer permanent injuries that impair their ability to perform certain tasks but still allow them to work in some capacity. PPD benefits compensate for the reduced earning capacity caused by the injury. Temporary total disability (TD) benefits are for workers who are completely unable to work for a temporary period, and death benefits are provided to the worker's dependents in case of fatal injuries. Rehabilitation services assist workers with retraining for new roles if they can't return to their previous jobs. Question 12, topic Deductibles and coinsurance. A business property policy has a deductible of $5,000 and a loss occurs amounting to $50,000. The policy also includes an 80% coinsurance clause, and the insured property's value is $100,000. How much will the insurer pay if the coinsurance requirement is met? A. $40,000. B. $45,000. C. $50,000. D. $35,000. Answer: B. $45,000. Explanation: the policyholder meets the 80% coinsurance requirement because the insured value $100,000 is sufficient compared to the actual cash value, since 80% of $100,000 equals $80,000. Therefore, coinsurance does not reduce the claim payment. The insurer will pay for the loss minus the deductible. The loss is $50,000, and after applying the $5,000 deductible, the insurer's payment is $50,000. $5,000 equals $45,000. Question 13, scenario-based. Topic: Commercial general liability. Mr. Davis owns a small bakery in Illinois. A customer slips on spilled flour in the store and sustains an injury. The customer sues Mr. Davis for medical expenses and pain and suffering. Mr. Davis has a commercial general liability (CGL) policy in place. Which coverage part of the CGL policy would handle this claim? A. Coverage bodily injury and property damage liability. B. Coverage B. Personal and advertising injury liability. C. Coverage C. Medical payments. D. Business auto coverage. Answer: A. Coverage bodily injury and property damage liability. Explanation: under commercial general liability (CGL) policy, coverage provides protection for bodily injury and property damage that the business may be legally liable for arising from accidents or negligence occurring on the premises. In this case, the customer's injury from slipping on spilled flour falls under bodily injury, making coverage applicable. Coverage B deals with personal injury related to offenses like slander or libel, while coverage C offers limited medical payments coverage, typically without requiring legal liability. Business auto coverage does not apply to this scenario. Question 14, topic Indemnity. Concept of insurance. The principle of indemnity in insurance ensures that the insured is A. fully compensated for all possible losses, B. restored to the same financial position they were in before the loss, C. able to make a profit from an insurance claim, D. provided with coverage regardless of the cause of loss. Answer: B. restored to the same financial position they were in before the loss. Explanation: the principle of indemnity in insurance is designed to prevent the insured from profiting from a loss. It aims to restore the insured to their financial position before the loss occurred, not to exceed that amount. This concept ensures fairness by compensating the insured for actual losses only. Making a profit or covering non-insurable losses would violate this principle. Additionally, insurance policies include exclusions for certain causes of loss, such as intentional acts or specific hazards like war or nuclear risks. Question 15, topic Personal auto policy. Part D, coverage for damage to your auto if an insured's vehicle is stolen and not recovered. Which of the following coverages under a personal auto policy PAP would apply? A. Collision coverage. B. Comprehensive coverage. C. Liability coverage. D. Uninsured motorist coverage. Answer: B. Comprehensive coverage. Explanation. Comprehensive coverage under personal auto policy PAP applies to damages or losses to the insured's vehicle that are not caused by a collision. This includes events such as theft, fire, vandalism, or natural disasters. In this case, the theft of the vehicle is covered under comprehensive. Collision coverage applies to accidents involving other vehicles or objects. Liability coverage deals with damages the insured causes to others, and uninsured motorist coverage addresses damages caused by uninsured drivers. Question 16. Topic: Workers' compensation insurance. Employer responsibilities. Under Illinois workers' compensation law, which of the following is an employer's responsibility? A. Paying benefits directly to the injured employee. B. Covering medical expenses regardless of fault. C. Ensuring no worker files a claim for a work-related injury. D. Providing coverage only if the injury was caused by negligence. Answer: B. Covering medical expenses regardless of fault. Explanation. In Illinois, workers' compensation is a no-fault system, meaning that employers must cover medical expenses for work-related injuries regardless of fault. Employers are responsible for securing workers' compensation insurance, and the insurer typically pays the benefits to injured workers. Employers do not directly pay the benefits themselves except in self-insured scenarios. Workers are entitled to compensation even if the injury was not caused by negligence, and employers cannot prevent workers from filing legitimate claims. Question 17. Topic: Homeowners policy. Section Roman II. Liability coverage. A visitor trips over an extension cord in the homeowner's living room, suffering a broken arm. Which coverage under homeowners policy is likely to pay for the visitor's medical expenses? A. Coverage A. Dwelling. B. Coverage B. Other structures. C. Coverage E. Personal liability. D. Coverage F. Medical payments to others. Answer: D. Coverage F. Medical payments to others. Explanation. Coverage F. Medical payments to others under homeowners policy provides no-fault medical expense coverage for injuries sustained by guests or visitors on the insured's property. This coverage applies regardless of whether the insured is legally liable for the injury. Coverage E. Personal liability would apply if the visitor filed a lawsuit and the insured was found legally liable. Coverage E and B apply to physical damage to the insured's property, not injuries to visitors. Question 18. Topic: Commercial auto insurance. Business auto coverage. Which of the following is not covered under the business auto coverage form in a commercial auto policy? A. Damage to vehicles owned by the business. B. Liability for bodily injury caused by an employee using a company vehicle. C. Damage to an employee's personal vehicle used for company business. D. Liability for property damage caused by a company vehicle. Answer: C. Damage to an employee's personal vehicle used for company business. Explanation. The business auto coverage form in a commercial auto policy provides liability coverage for bodily injury and property damage caused by business-owned vehicles and also covers damage to those vehicles. However, damage to an employee's personal vehicle used for company business is not covered by the business's policy. Instead, the employee's personal auto insurance would typically provide coverage for such damage, though a non-owned auto endorsement could be added to the business policy to extend coverage in certain cases. Question 19. Topic: Reinsurance. Purpose. The primary purpose of reinsurance is to A. Transfer part of an insurer's risk to another insurer. B. Provide coverage for catastrophic risks to individuals. C. Increase the premiums an insurer can charge. D. Eliminate the need for insurers to maintain reserves. Answer: A. Transfer part of an insurer's risk to another insurer. Explanation. Reinsurance is a risk management tool used by insurance companies to transfer part of the risk they have assumed from their policyholders to another insurance company. This allows insurers to reduce their exposure to large claims and stabilize their financial position. Reinsurance does not eliminate the need for reserves or directly affect the premiums charged to individuals, but it helps insurers manage catastrophic risks more effectively by sharing those risks with other companies. Question 20. Topic: Professional liability. Errors and omissions. A financial advisor gives incorrect investment advice to a client, causing significant financial loss. Which type of insurance would cover the financial advisor for this claim? A. General liability insurance. B. Errors and omissions EO insurance. C. Commercial property insurance. D. Workers' compensation insurance. Answer: B. Errors and omissions EO insurance. Explanation. As an omissions EO insurance, also known as professional liability insurance, provides coverage for professionals who are sued for negligence, errors, or omissions in the performance of their services. In this case, the financial advisor's incorrect investment advice caused financial harm, making EO insurance applicable. General liability insurance covers bodily injury and property damage, not professional negligence. Commercial property insurance covers physical damage to business property, and workers' compensation insurance covers injuries to employees, not liability claims related to advice or professional services. Question 21. Topic: Business Owners Policy. Eligibility. Which of the following types of businesses is most likely eligible for a business owner's policy? A national chain of department stores. B, a large manufacturing plant. C, a small local bakery. D, a multinational corporation. Answer: C, a small local bakery. Explanation: a business owner's policy (BOP) is typically designed for small to medium-sized businesses such as a small bakery. It combines property and liability coverage into a single policy and is often more affordable for smaller businesses. Larger businesses like a national chain, large manufacturing plant, or multinational corporation require more comprehensive, tailored policies beyond the scope of a BOP due to their size, operations, and risks. Question 22. Topic: Commercial property. Business income coverage. Business income coverage under a commercial property policy is designed to A, cover the cost of repairs to damaged business property. B, provide funds for lost income due to a covered peril. C, pay for employee wages after a layoff. D, reimburse the business for increased operating expenses. Answer: B, provide funds for lost income due to a covered peril. Explanation: business income coverage, also known as business interruption insurance, provides compensation for income lost due to suspension of operations resulting from a covered peril such as fire or natural disaster. It helps the business continue to meet financial obligations, including payroll and other expenses, during the restoration period. It does not cover the cost of property repairs, employee wages after a layoff, or increased operating expenses directly, though extra expense coverage can be added for such costs. Question 23. Topic: Flood insurance. National Flood Insurance Program. Which of the following statements about the National Flood Insurance Program (NFIP) is true? A, flood insurance is included in standard homeowners policies. B, NFIP provides coverage for flood damage to businesses and homes. C, flood insurance is optional in all flood-prone areas. D, the NFIP is a private insurance program. Answer: B, NFIP provides coverage for flood damage to businesses and homes. Explanation: the National Flood Insurance Program (NFIP) is a federal program that provides flood insurance to property owners, including businesses and homes in participating communities. Standard homeowners and commercial property policies do not include flood coverage, so separate flood insurance must be purchased. In flood-prone areas, flood insurance may be required by lenders. The NFIP is administered by the federal government, not private insurers, though private insurers may administer NFIP policies on behalf of the government. Question 24. Topic: Personal auto policy. Uninsured motorist coverage. Uninsured motorist coverage under personal auto policy is intended to provide coverage when A, the policyholder causes an accident. B, the at-fault driver has no insurance. C, the at-fault driver is underinsured. D, the policyholder's vehicle is stolen. Answer: B, the at-fault driver has no insurance. Explanation: uninsured motorist coverage protects the policyholder if they are injured in an accident caused by a driver who does not have liability insurance. It covers medical expenses and, in some cases, property damage. Under insured motorist, coverage applies when the at-fault driver has insufficient insurance to cover the damages. Coverage does not apply when the policyholder causes the accident or if the vehicle is stolen. Question 25. Topic: Homeowners insurance. Loss settlement. Under a homeowner's insurance policy with a replacement cost endorsement, how is a covered loss to the dwelling typically settled? A, the insurer pays the market value of the property. B, the insurer pays the actual cash value (SCV) of the property. C, the insurer pays the replacement cost minus depreciation. D, the insurer pays the full cost to repair or replace without deduction for depreciation. Answer: D, the insurer pays the full cost to repair or replace without deduction for depreciation. Explanation: A replacement cost endorsement in a homeowner's insurance policy allows for a covered loss to be settled based on the cost to repair or replace the damaged property without deducting for depreciation. This ensures that the insured can rebuild or repair their home to the same condition it was in before the loss. Without this endorsement, the insurer may settle the claim based on the actual cash value, (CV), which factors in depreciation. Question 26. Topic: Commercial crime insurance. Employee theft. Which of the following is covered under the employee theft insuring agreement in a commercial crime policy? A. Loss of income due to employee negligence. B. Damage to business property by an employee. C. Loss of money or property due to an employee's dishonest acts. D. Vandalism caused by an unknown individual. Answer: C. Loss of money or property due to an employee's dishonest acts. Explanation: the employee theft insuring agreement in a commercial crime policy covers losses of money, securities, or property resulting from an employee's dishonest or fraudulent acts, such as theft or embezzlement. It does not cover negligence, damage to business property, or vandalism caused by individuals not employed by the business. Vandalism and other types of property damage would typically be covered under a commercial property policy, not the crime policy. Question 27. Topic: Inland marine insurance. Coverage overview. Inland marine insurance provides coverage for which of the following types of property? A. A home damaged by a flood. B. Personal property while in transit. C. Commercial buildings. D. Automobiles used for business purposes. Answer: B. Personal property while in transit. Explanation: inland marine insurance covers property in transit over land, as well as certain movable or specialized property that is not typically covered under standard property policies. This can include personal property, equipment, and tools while they are being transported. It does not cover stationary property like homes or commercial buildings, which would be covered under homeowners or commercial property policies, or automobiles, which are covered by auto insurance. Question 20. Topic: Umbrella insurance. Excess liability coverage. Which of the following best describes the purpose of an umbrella insurance policy? A. It provides coverage for any type of loss. B. It replaces the need for primary liability insurance. C. It provides excess liability coverage above the limits of other policies. D. It offers coverage for property damage to the insured's home. Answer: C. It provides excess liability coverage above the limits of other policies. Explanation: an umbrella insurance policy is designed to provide additional liability coverage that kicks in when the limits of underlying primary insurance policies, such as auto or homeowners liability coverage, are exhausted. It does not replace the need for primary insurance, nor does it cover property damage to the insured's home. Umbrella policies can also provide broader coverage for certain types of claims that may not be covered under primary policies. Question 29. Topic: Commercial general liability. Pollution exclusion. Which of the following scenarios would most likely be excluded under the pollution exclusion of a commercial general liability (CGL) policy? A. An employee spills a cleaning solution that causes injuries. B. A company's boiler explodes, releasing toxic fumes into the atmosphere. C. A customer slips on a wet floor and is injured. D. A contractor accidentally damages a client's property. Answer: B. A company's boiler explodes, releasing toxic fumes into the atmosphere. Explanation: the pollution exclusion in a commercial general liability (CGL) policy generally excludes coverage for bodily injury or property damage arising from the release or discharge of pollutants, including toxic fumes, chemicals, and waste. The boiler explosion that releases toxic fumes would likely be excluded under the pollution exclusion. Injuries from spills or slips would generally be covered under the policy's liability provisions, while accidental damage to property could also be covered depending on the circumstances. Question 30. Topic: Risk management. Risk transfer. Risk transfer is best illustrated by which of the following examples? A. A business decides to retain the risk of small claims and self-insures. B. A homeowner purchases insurance to protect against fire damage. C. A contractor reduces risks by using safety equipment. D. An investor avoids investing in high-risk stocks. Answer: B. A homeowner purchases insurance to protect against fire damage. Explanation: risk transfer occurs when an individual or business shifts the financial burden of a potential loss to another party, typically by purchasing insurance. In this case, the homeowner transfers the risk of fire damage to the insurance company. Retaining risk through self-insurance is an example of risk retention. Using safety equipment is risk reduction, and avoiding high-risk stocks is risk avoidance, not risk transfer.